for tuning in to the first episode of Crypto Deep Dive. I'm your host, Mehdi Farouk, Senior Investment Analyst at Token Metrics. As the name of the show throws a hint, in this show we'll delve deeper into one altcoin every week. These are typically those altcoins which Token Metrics team as a whole believe is very interesting and has a good potential going ahead. We'll delve deeper into the team of the project, the investors involved, tokenomics, valuation, and much more. This week, we will delve deeper into the investment thesis and valuation analysis of two projects simultaneously called Moonriver and Moonbeam. Moonbeam and Moonriver both have a similar value proposition. They're trying to tackle a similar issue. So let's first start with Moonbeam and then we'll elaborate on what Moonriver is trying to do. So Moonbeam will firstly be living on the Polkadot blockchain. And what Moonbeam is, it's just a smart contract platform that provides developer with the ability to build DeFi and Web 3.0 application. Now, Moonbeam is EVM compatible. Now, what does EVM compatibility means? That means a developer who has already built projects on Ethereum without re-engineering their code can deploy their code onto Polkadot ecosystem. They can not only transition towards Polkadot ecosystem, but they can run their code simultaneously both on Ethereum network as well as Polkadot network. But why would a developer want to do that in any case? Firstly, Polkadot is a blockchain of blockchain. What does that mean? It means that it has cross-chain compatibility and functionality. So let's say if a developer gets into the Polkadot ecosystem, he has the ability to communicate, transfer assets, and interact with 99 other blockchains, which is amazing. And Ethereum doesn't have that functionality. And for that functionality, you have to use bridges. Apart from that, Ethereum doesn't have on-chain governance. And because of that, there could be issues within the community that we have previously seen with hard folks. For example, if a governance structure does not decide on a particular issue, we have seen in past Ethereum breaking up from Ethereum Classic. So a similar thing can happen in Ethereum. So we don't have on-chain governance in Ethereum, but we have on-chain governance in Polkadot, which is attractive for developers. Now the issue is developers, you can argue rather than just using the Solidity program, why do they just not go directly onto the Polkadot ecosystem? Why do they have to use Moonbeam? Now the issue is if you want to get involved within the Polkadot ecosystem, you need to take participation in the auction of one parachain. And a lot of projects won't have that capability or have the financial resources. So what they can do is they can simply ramp onto and use their existing Solidity code and ramp onto Polkadot. So what is Moonriver now? So Moonriver is exactly all the same things that Moonbeam is, but rather than being deployed on Polkadot, Moonriver will be deployed on Kusama. And another differentiation factor for Moonriver is all the projects that launch onto Moonbeam first has to be battle tested on Moonriver, and they will be battle tested on Kusama network. So those projects which are more on the experimental side will be first deployed on Kusama, and then once everything is okay, they will be deployed on Moonbeam. Now there are both pros and cons for that. Firstly, it makes Moonbeam more premium, but then the issue is a lot more project and ecosystem development from Ethereum can happen on Kusama thanks to Moonriver. So both have their cons and pros, and I wouldn't particularly say that one is superior to the other. So one of the mental models I use in evaluating crypto project is to do a deeper analysis of the tokenomics. I divide the tokenomics into two sides. First is the demand side. That basically shows me the token utility coming from the consumer side of things, and then the supply side. How does the token allocation, distribution, and the supply schedule kind of interacts with the whole demand side in order to make sure that the investors have enough incentives, both from the consumer end and from the team's end, to make the meets end. So in terms of the token utility, you have four main use cases for both Moonriver network as well as Moonbeam. So Moonbeam network token will be called Glamour, GLMR, and Moonriver token will be called MOVR, Mover. So your first utility is basically just as an Ethereum, it will be used as a gas token that supports smart contract execution. Then the second utility is to incentivize validators to kind of secure the network. The third one is you use the token for decentralized governance, on-chain governance decision. This could be around the block time. It could also be around how much the transaction fees in the future gets burned. And the final use case is payment for network transaction fees. Also note that in terms of the transaction fees, 80% of the tokens, the fees will be burned, and the 20% will be sent to on-chain treasury. The treasury will mostly be involved in making sure that they have enough resources to make sure the parachain auction, they have enough resources to make sure the parachain auction on annual basis is secured. So I think in terms of the demand side of tokenomics, you can essentially think of both Moonriver and Moonbeam as having the demand side of having a similar utility as any other layer 1, such as Ethereum. So when you do a deeper dive within the supply side of the tokenomics, you kind of observe that Moonbeam is more centralized. The reason why I say it's slightly more centralized is because you have 14% of allocation towards investors from seed funding round, and then 12% from strategic funding. Apart from that, you also have some allocation, around 15% of allocation towards employees. Not only that, there's also one more issue. Moonbeam has 1 billion token supply within the market. Now, if you compare this with a Moonriver, for example, Moonriver is more decentralized and scarce. It only has 10 million allocation versus 1 billion allocation on Moonbeam. And not only that, there weren't any investing round, VC round, private sales round involved. No team has the token allocation as pre-mined or pre-ICO. So you don't have those kinds of issues. So it's more decentralized because it's largely owned by the developer community, and will also have some tokens for distribution as community initiative. I think 40% token allocation goes towards community initiative, as you can see over here. So all in all, Moonriver is very decentralized compared to Moonbeam. Now, once the Moonbeam is launched, I think the parachain auction is ongoing. The first few months, based on the supply schedule of Moonbeam, will be very rough. So as you can see over here, let me quickly point it out. So as you can see over here, this part of the supply schedule kind of shows to you there is a steep rise in the supply. So there could be price pressure if you're trying to enter now. But for long-term investors who have the patience, maybe they can wait for a few months and see how the price behaves. And once the circulating supply, this massive chunk of circulating supply is in the market and price goes down, one could think about entry within Moonbeam if they're interested. Now, Moonriver does not have such a steep supply schedule. Even though it has a steep one, but it doesn't have as steep as this in case of Moonbeam. So in terms of investors, they do have reputable investors, some of the reputable investors including Binance Lab. So if Binance is invested, you can potentially see uplisting within Binance, and usually projects launched by Binance tend to perform very well. Then you have Coin Fund, you have CoinGecko, their own venture fund investing, you have Verify Capital, and you have HYPERSPHERE. Now you might be surprised who is HYPERSPHERE. And even I was surprised when I did my digging in terms of finding something very important for investors. So Hyperstar is one of the VCs founded by the co-founder of Polkadot. So this guy over here, he founded HYPERSPHERE. So in my experience, if a Polkadot's co-founder has a VC, he'll kind of also have some good information in terms of community, in terms of developers' connections, and he'll know which projects within the Polkadot ecosystem will do well. So if he's invested in Moonbeam, that also gives me assurance that this is one of the projects to watch out for and could have a huge potential, which we'll also do an exercise later on where we'll size it up against Ethereum and also do a valuation exercise. Valuing a smart contract layer 1 platform is rather difficult. Reason being, the token itself can be thought of having a triple function. First, it acts as a money, It also acts as commodity. For example, you need to pay that fees for gas metering, and then it also acts as an asset within the ecosystem. So calculating the intrinsic value of layer 1 can be difficult, but what we can do is we can calculate the valuation based on how similar projects have done. So in this diagram over here, I've done the similar exercise. Firstly, I've taken a fully diluted market cap, so I can have apple-to-apple comparison of different layer 1s and layer 0s, and to see how expensive they are relative to each other. So Ethereum has the biggest fully diluted market cap. So fully diluted market cap takes all the current and future token supply that will be released in the market. So Ethereum has 352 billion valuation. In fact, at the time of this video, Ethereum, rather than 3,100, is trading at 3,500. So the valuation has even increased further. So that said, Mover is around 3.2 billion versus 352 billion of Ethereum. So if we say, let's say Mover kind of captures similar market share as Cardano and Solana, for instance, what kind of ROI we are looking at? So in this table, I've done this analysis, and let's say if it captures Cardano's valuation, you are seeing a 30x ROI. So in case of Solana, 31x, and in case of current price of Ethereum, more than 110x. But one could argue that, okay, you know what, Ethereum, so not Cardano, but Solana, for instance, have a lot of assets locked within the platform, within the ecosystem, while Moonriver it rather doesn't have any asset locked. So in that case, what we have done is we have tried to calculate Moonriver's valuation versus all the other smart contracts, while also taking into account the total value locked. So Moonriver is trading 16 times more than the asset it has locked within the platform, whilst Ethereum is just trading 3.2. Binance Smart Chain Binance BNB token is trading 3.5 times, and Solana is trading 7.8 times valuation versus the asset it has. Now, we couldn't do this for Moonbeam, by the way. The reason it's the token isn't launched, so we don't know how much value the assets have been locked and things like that. But in case of Moonriver, we do know this, right? So market at the moment is kind of pricing future growth. Market expects that the TVL to grow further, and hence the valuation from this industry standard is very, very high. And it also makes sense because when I was making this graph 2 weeks ago, which we also published on Twitter, the valuation, which is fully diluted valuation divided by the total asset lock, was 34.33. Now it has actually come down to 16. So what is market expecting? I think market is expecting it to be a growth play rather than a value play, and this is currently, like, I can summarize this by this diagram over here. So market expects Moonriver to be Charmander, and it can grow into a Charizard, and the value locked will grow substantially going forward. So you can think of Moonriver rather than a value investment, more of a growth investment. Now, if we do market sizing of how Moonriver compares to, let's say, Ethereum, market at the moment expects Moonriver to just capture less than 1% of Ethereum. By the way, I have used $3,000 as my Ethereum base case. Now, at the moment, Ethereum is trading 3,500, which is 20% higher. But just to be on the conservative side and try to like smooth out market fluctuation, I've kept Ethereum price at 3,000. So you can see the market at the moment expects that it captures just below 1% market share, which I think is being underappreciated by the market itself. In my base case scenario, I'm speaking to the blockchain research team at Token Metrics, and the fundamental analysis we have done in terms of investors involved and the team involved and so on and so forth. We believe Moonriver has the potential to capture between 6 to 10%. And in this case, we are looking at a 5x to 10x kind of returns if it does capture that percentage of market share of Ethereum. Now, we have also done a scenario analysis. So the purpose of this scenario analysis is basically to give you an appreciation of what if the Ethereum price also moves whilst we have the 6 to 10% market dominance as constant? So let's say if Ethereum from current price kind of doubles, um, and basically Moonriver is able to capture 6% of the Ethereum's market share, then we have 4,800 as our target price for Moonriver. Now, if it captures 10% of Ethereum's market share, we then have $8,000 as our target price. So this gives you the scenario that can play out depending on the market share of Ethereum and how much market share does Moonriver capture. Now, this analysis can also be replicated similarly for Moonbeam once the token is launched. Now, the investment thesis for both Moonriver and in future when Moonbeam is launched is quite simple. First, we believe that the ease of transition for both developers, such as some of the tools available, easy to replicate program for Solidity developers, and even for users where they can use MetaMask and have similar choices like, let's say, SushiSwap within the network. That means both Moonriver and Moonbeam has broad built-in network effects, and they also have the composability element from inception. So what that means is Moonriver and Moonbeam will grow in tandem with both the Ethereum and Kusama ecosystem in case of Moonriver, and Ethereum and Polkadot ecosystem in case of Moonbeam. So you are basically investing in dual assets simultaneously and trying to take advantage of the growth of both Ethereum and Polkadot, or Ethereum and Kusama respectively. Another feature, another thesis, another angle to play Moonbeam and Moonriver is to think of both the investments as Ethereum hedges. So what do I mean by Ethereum hedge? At the moment, we have large gas fees, slow transaction, and because of that, there could be a problem going forward when scalability becomes more issue. And for whatever reason, Ethereum 2.0 gets long dated, gets delayed. And in that case, you can see some of the developers transferring their code to Moonbeam or Moonriver. So in this case, you can think of it as an Ethereum hedge. Plus, Ethereum hasn't adopted proof of stake or sharding yet, while in the case of both Moonriver and Moonbeam, they both will have proof of stake consensus mechanism from the word go. So in the future, if Ethereum fails to deliver, you already have a hedge in place. Not only that, Ethereum is also kind of experimenting with multiple shards. Like you can think of multiple shards as like basically breaking the chain into like 64 different components, whilst this is untested and we don't know how in mainnet or in real life that sharding mechanism will impact the Ethereum ecosystem. But in case of Moonriver and Moonbeam, we don't have multiple shards, we just have single shards. So that's a risk that's negated with both of these investments. Now, apart from that, you also get additional features. In case of Moonriver and Moonbeam, the smart contract will have the ability for it to communicate with 99 other blockchains, have on-chain governance, and I think both of these features are very, very interesting, very powerful on its own. So because of these three reasons, you can kind of get a picture of how different investment theses and angles are in play. For a comprehensive coverage of Moonriver and Moonbeam, it also makes sense to kind of give you and highlight some of the risks that can be posed to our thesis and valuation. So firstly, the market could see Moonriver and Moonbeam as potential competitors. That could lead to valuation contraction. So for example, in our case of where we did market sizing, so instead of market thinking, okay, Moonriver should take 6% of Ethereum share, it could be that Moonriver perhaps takes 3% and Moonbeam perhaps take 3%. Similarly, because of the duality of these two projects, there could be some possibility that market also, rather than just seeing them as competitors, kind of see them as a very similar protocol, and you also have a valuation contraction because one project that gets listed in Ethereum can also listed in Moonriver and Moonbeam. So the novelty factor kind of dies away and market kind of prices that in. So that can also be in concern. In terms of competitors, we are already seeing some signs of EVM compatibility. So within Polkadot, you have Akala and A-Star, which provide EVM compatibility. There are some also projects being built on Solana, Cosmos, that might provide multi-chain compatibility. So that is one area to be concerned about and keep an eye on to see how those things progress further. It could also be that maybe one of those projects that kind of provides a multi-chain universal access could be even more valuable than Moonriver. So in terms of investment, have an eye out to see if some projects kind of offer these facilities and ability for developers to kind of transit. Apart from that, you also we have done a relative valuation. So we have compared projects based on their valuation. But it could be the fact that market at the moment is mispricing everything, and market at the moment is pricing everything to extremes, and we might be in a bubble. So in that case, it could also be a possibility, instead of Ethereum being 400 billion or 350 billion market cap, Ethereum true value could be 150 billion market cap. So if we capture some of the market share of Ethereum or do a valuation analysis, we could also be wrong, because market right now is in a bubble, for example, and there's no assurance that there will be a cheaper protocol. So these are some of the risks to our thesis evaluation. If you did like the investment angle, I've also done a brief TA for you to kind of optimize your entry point. Since Moonriver is a new project, what we have done is we have tried to do TA on a 4-hour time horizon. So initially we can think of this as our trend line. So if this was a trend line, then if the price action continued on a similar path, we could have seen it go higher. But recently what has happened is there was a breakdown of this trend line, and the price action kind of also showed this exhibition that it also broke some of the moving averages. So now these moving averages will act as resistance. So the next support for Moonriver is potentially at this 250 to between 260 mark, and there could be a possibility that we retrace from here and then go higher. So if we do retrace from here and go higher, which is the scenario over here which I have played out, then you can kind of say that, okay, this will be our new trend line, and then around end of the year, the investment will kind of give you return around $500. The price can go to up to $500. But at the moment, if you are looking for entry, 250 to 260 mark is the entry point. It could also be, it could potentially also be the case that this is a false breakout of the trend line. And if this is a false breakout, we might test the moving averages again, and if those moving averages fail to act as resistance, we test this trend line again and basically go higher from here as well. So the two strategies for entry could be, you can either go in terms of the breakout from the previous trend line and the moving averages, or you can wait for the next resistance, which is around 250 to 260 level, and then perhaps take an entry from here. So all in all, Moonriver and Moonbeam tick most of the boxes within our investment checklist. Valuation is fair, tokenomics is great, and in terms of investment thesis, you have multiple angles and narrative to play. So I hope you enjoyed this week's episode. Thanks for tuning in to Crypto Deep Dive, and join me next week for more analysis and in-depth review of altcoins.